Hi everyone, today let's talk risks to the market. Trade tensions are a bigger risk to the stock market than the cough situation, warns Christina Hooper. Christina Hooper is the Chief Global Market Strategist for Invesco. Invesco currently has about $1 trillion in assets under management, and let's hear what she has to say about it.
As always, there will be some jelly at the end, which is something I enjoyed outside of the markets.
If you have big dreams like buying the Mercedes GTR Pro, go ahead and like and subscribe. It comes with a twin-turbo V8, making 577 horsepower and a top speed of 198 miles per hour. The starting price is $200,000. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started.
Well, that's because the other big risk to the market, which was, of course, the pandemic, has largely been isolated and neutralized because of all the monetary policy support that the Fed has provided. That really has decoupled the economy from the stock market. But this is a direct hit to the stock market because, as we saw in late 2018 and 2019, the tariff war was very, very problematic, created a big headwind for stocks, a bigger headwind than for the overall economy, and that could be happening again.
So there we have Christina Hooper giving her thoughts on the economy and the impact of the cough situation versus trade tensions. So let's start with her first claim. She says that the Fed's actions have essentially neutralized the impact of the cough situation. And I've been saying this for several videos at this point. Don't fight the Fed. The Fed continues to lend money at extremely cheap costs. And in doing that, they are essentially neutralizing the contraction of the U.S. economy. Now, whether this continues to hold long term, I think remains to be seen. But in the short term for the stock market right now, the Fed has been able to neutralize a lot of these cough-related retractions. To illustrate this point, this is Atlanta Fed Now GDP projections. They are currently projecting a minus 12% GDP for Q2. And you can see here, many of the industries are also going to be much lower than the 12% projection. So 12% is GDP as a whole. And that's going to be skewed towards these large market cap companies that are continuing to operate. However, many of these sectors are going to do much worse. However, the Fed is currently handing out free money. And I say free money because these loans that the Fed is offering are at below average inflation rates. So you can see here, this is a graph of inflation, and it kind of hangs out right around the 2% mark. It goes above and below at various times, but 2% on average is a consensus number. And if the Fed is offering cash at 0 to 0.25%, then that is essentially free money when compared to inflation. So all of that is supporting the idea that the Fed's actions have decoupled the economy from the stock market. So the economy and productivity are going down. However, the stock market is recovering fairly well. And this is because of all of that essentially free cash being injected into the system. Put another way, this is essentially borrowing future productivity and bringing it into the present through a method of low-cost loans. But that system is based on the fact that there will be future productivity. And if there isn't, then the system that the Fed is currently creating could potentially unwind. So the long-term theory is that the productivity will return to somewhat normal rates in the future. Of course, that theory could potentially not come true, and we might be in a much more difficult position. So my point to all of this is that while the cough situation might be mitigated for right now, I don't think her disregard for the cough situation is completely warranted. She then went on to say that the tariff war resurgence would have a direct hit on the markets in a way that the cough situation did not. So what she's really saying here is that the tariff war is going to affect productivity as well as profit margins when trading with China. Next, it talks about Beijing's plan to put in security measures into Hong Kong. It also says here that President Trump considers the move a human rights violation and warned that Washington would react very strongly. Of course, nobody really knows what this means. It seems like world leaders throw out random threats like that pretty frequently without any kind of specification or even a lot of follow-up, to be honest. So until we see what that really means, I'm not going to put a lot of weight on that statement. It then goes on to talk about the Senate bill that was passed. The bill said that companies that wanted to be listed on American stock exchanges needed to open their books to American regulators, and they would have to do that for 3 consecutive years. And if they didn't comply right away, they could be removed right away. However, if they did comply right away, they could remain on the exchanges until they meet the 3-year requirement, at which point they would have to continuously comply with regulators. It still remains to be seen if this will pass in the House or go to the president. But the other piece to this bill was that any foreign companies would have to disclose if their government was a part of their company, which for China, being a communist country, is definitely a difficulty. And we don't know if China is going to comply with that. And if they choose not to, they will probably move over to the Hong Kong exchanges, which would reduce their exposure to American investors. But I guess that's kind of the point. Going on here, she explains the different kinds of risk between US stocks and Chinese stocks, saying similar to what I just said, actually. She said that the risk profile for Chinese stocks is a little bit higher. However, she does say that the growth opportunity is also higher. I'm not sure if I fully agree with that. China is definitely a faster growing economy at this time than the United States, but I'm not sure that exactly translates to stock market growth or really a better investment opportunity. It also says here that US stocks are backed by monetary policy, which makes them a little bit more defensive, which also attributes to the reduced risk. She also says here that she views China and US stocks as a complement to each other, which means she's not focused on one market over the other. Again, I don't agree with this. I think the US has better stock options and better growth potential with less risk. And then she goes on to say that to mitigate the risks here, you should diversify across multiple stocks. Of course, this is true for any portfolio. Diversification is important. She then says the biggest lesson we've learned from the global crisis has been to not abandon stocks and lock in losses, but maintain a long-term asset allocation. Of course, this is all true. If you've been watching the markets, they dipped down 35%, and they've currently pulled back to within 10% of the highs. And if you had locked in your losses and exited the market, then you would have missed out on the rebound. In terms of my opinion on Chinese stocks, I currently do not own any, and I do not want to be exposed to this potential risk. And this article has really outlined a lot of the different reasons. I don't want to be involved in political squabbling, and I don't want my personal finances to be affected as a result of them. This is not to say I won't continue to watch Chinese stocks and potentially invest in them in the future. If relationships between the United States and China improve, then there is certainly potential for investment and growth opportunities. But for right now, it's not my focus, and I have other stocks that I would prefer to own. Of course, this is not financial advice. You should consult your own financial advisor before making any decisions, and this is for entertainment purposes only. If you found any of that information useful or interesting, go ahead and like and subscribe. And with that, let's get to today's jelly. So today's jelly is a squirrel obstacle course. This channel is called Mark Rober, and he does lots of different types of inventions, and he decided to make this squirrel obstacle course and observe the squirrels in his backyard going through the course. It's actually really entertaining, and the way that he narrates it is also very entertaining. You can see here, though, that the video is 21 minutes long, so I'm going to chop together a few of my favorite parts, and I will link the full video in the description. So here's a little bit of what that looks like.
Rick. So he hops back on, and he's actually doing better than his first attempt. Just barely. This is the best because he's like, okay, I got this. Never mind. Well, maybe I definitely don't. And this was the exact moment I realized I just might be outmatched here. So here's a single camera shot of a full run, and by the end, all of them could do the full course in less than 40 seconds. And while we're watching, you might be wondering what happened to the squirrelaput. Unfortunately, they didn't really fall for my illusion much, but I'm about to show you the 2 times they did. And as a promise to my wife, I turned the pressure to only 40% full power, so the acceleration the squirrel would feel is about half a G, which is 10 times less than a typical roller coaster. Additionally, I never turned on either the home wrecker trapdoor or the launch platform when I He's also a bit flighty, as you know, which worked against him here because down below Fantastic Gus, ever the opportunist, comes through with a real stroke of brilliance. But pretty soon Marty comes back like, I'm the one who kind of earned that. And then Fantastic pretty much the whole time. Alright, now here's a second angle. Also, even if you don't trust my calculations, I can assure you that the squirrels did not care. In both launch cases, they were back up on the course in like 5 minutes. Here's the slow-mo, and see if you can spot the 2 critical things he does to make sure he lands feet down. Did you catch it? The first critical moment is right here. He's already done the predictive math, and he's locked his head on the spot where he plans to land. And now his head will not lose that lock the whole way down. What's crazy is the time it takes him to do all the predictive math to know exactly where he will land and to lock his head is 300 milliseconds. That's exactly this long, literally less than the blink of an eye.
So as you can see, he's a really good storyteller, and he definitely injected a lot of humor into the video. And in the full video, he goes into more detail on each obstacle and exactly how they made progress through each of the different obstacles. Definitely worth the watch. Go ahead and comment down below what you thought of the obstacle course. And with that, go ahead and like and subscribe, and have a great day.